to stonks.
Stonks.
All right. So interesting idea today. Doing a little bit more of a focus type episode. So what we're going to kind of do here is look at the second quarter and kind of do like a market check-in type idea, kind of an overview, see what's been going on the past little bit here. Kind of want to lay out that this isn't going to be like a political show. It's not going to be kind of your average market tracking show by any means. It is also not any financial advice. It is not really. It's really just a conversation.
We're just talking
between two guys about what happened the past couple months and kind of giving our idea. And so, kind of with that, we got Graham Burton again because he's amazing and willing to do this all the time. So I really appreciate that. But that's an interesting perspective, being a kind of swing trader and now kind of advancing his trading status as he can't drink water, but no problem. He's good. He's good at other things, I promise. He's credible. He's the most credible we could find.
Yeah, that's the answer.
But Graham, I don't know. You want to start with just kind of a little bit about kind of anyone that doesn't know you or hasn't seen you previously talking?
Yeah. So
something better than showcasing your drinking from a cup.
Yeah. So my name's Graham. I just turned 26. I went to high school with Dylan. We played basketball together. Known Dylan for it's about 10 years now. Become good friends. He's had me on to talk about my life, and also now doing this, talking about the markets, because that's what I do every day. Is I'm a full-time trader, so that's what I do. It has its pros and cons. It's a pretty cool career path, but it's it can be stressful, and every day is a learning experience. But hopefully, I can talk a little bit about what's going on, kind of how I look at the markets. That's probably what I'll more so talk about, how I think about things, and maybe, I don't know if credible is the right word, but
insightful.
Hopefully we can have a good conversation, and it'll be helpful for everyone, or just interesting to listen to at least.
Yeah, hopefully spark maybe some light bulbs going off. I don't know. Yeah. Maybe something
going on.
Yeah, something. Get some brain activity going.
Oh yeah.
So to kind of just give an overview quickly of everything that's happened, kind of laying out some big things. Granted, we're recording this so a couple weeks before the quarter closes, 3 weeks. I don't know, whatever. A little bit before, so maybe some things will happen.
Yeah, end of June.
But to give an over idea, interest rates, inflation, major parts of what's going on and everything. Kind of looking at what the Fed's doing, how the economy. Everyone's worried about if it's going to stay strong or if it's not. And also, a lot of attention around AI and tech. That's been a huge part of the conversation.
Mm-hmm.
Kind of looking at how much is this going to be real growth versus how much is kind of propped up. What's being priced in? Is it going to cut back? It's been especially interesting over the past couple days. Friday and Monday were very, very red, very bloody. So that's going to be kind of part of the big overall conversation of what's going on. And then global side, there's still kind of oil. You have conflict concerns in the Middle East. Tensions around the Strait of
Hormuz.
Words are a little challenging on this show, so bear with us as we go along. And then a very big conversation going on is IPOs, which I think is kind of interesting. See kind of what you're thinking about all that. But
yeah,
we have SpaceX that will be dropping tomorrow. And so that will be interesting to see how the market kind of prices everything in and what is going to happen with that. Is it going to be total disruption? Who knows? But we can't wait to find out in the next 24 hours. So kind of with all of that, you kind of still have this for your regular everyday person of jobs, housing, consumer spending, all of this kind of related back to the inflation and interest rates. Which is why you could potentially find some of this interesting that we talk about, because it could affect your daily life. And if it does interest you, I'd recommend going to someone that's more credible than us. But hopefully we spark the conversation and get you going. So with all of that and all those words and gobbledygook, Graham, what actually kind of stood out to you this quarter? What's been the most interesting part of it?
Yeah, so I think going all the way back to, like, look at my chart here, October of 25, we started this. We were in a strong uptrend, coming off the tariff lows. In 2025, they had that scare, and the market rebounded, and it was like a strong rally, about a 6-month rally, kind of nonstop. And then we went into this phase of just super, super choppy, back and forth price action, all the way up until April, so the start of this quarter. And a lot of that was driven by, the war in the Middle East, oil spiking like crazy as a result, and a lot of the fears that brought in terms of recessionary fears, because the idea was that we'd get a ton of rate cuts this year because, we had the rate hiking cycle, and the expectation was we'd get a lot of rate cuts this year, and that's ended up not happening because inflation has been a little bit higher than expected. We've had oil spiking, and the economy's remained pretty strong for the most part.
Yeah, you've had job growth, which is...
Yeah, so at the end of the day, the market, we didn't get those rate cuts, and then you have the war and everything like that, and then, more tariff stuff, and the market really, it was in this choppy phase up until, really late February, and then we sold off really hard. Like, the market really rolled over, and it looked really bad. Again, the same time as last year, late March. Yeah, late March. We bottomed on March 30th, and then we kind of consolidated for a little bit, and then we had the ceasefire announcement from Trump on April 7th. It was after the market closed. He, basically made an announcement that we'd come to some sort of agreement, and it just kind of caught everyone off guard because it's called a gap up when the market basically doesn't even trade in a range. It just opens at a price higher than any price it traded the day before. So it opened there and just took off. And so the last 2 months, basically exactly 2 months, we've been on this just crazy, what we call a lockout rally. Like, it was just hard to get in because it just gapped up and went, and if you weren't already in the leading stocks or the AI names or the data center names or, the fiber optic names, stuff like that, you kind of got left behind. Yeah. Unless you're in index funds, then you catch that. But it's kind of been, what I have noticed, it's been a really pretty narrow rally for the most part. You've had a few sectors that have participated, but if you were holding like a broad basket of stocks, across like 40 names, you probably have 20 that were doing okay and 20 that were not at all. So it's not been broad-based. Retail's been really weak. But, everything kind of around the AI ecosystem has been what's carrying. And a little bit of space stocks recently in anticipation of the IPO, the SpaceX IPO. But, I mean, from my perspective, this reminds me nothing of like late 2020, 2021, where it was like you had to look to find a stock that wasn't going up. Yeah. This has felt a lot different in that, like, it's been led by big tech, the Mag 7.
Keeping it very short list of what's actually driving.
What's actually working is not a super, super long list. Hopefully that expands, and that's great for traders like myself because there's more opportunities. There's always opportunities, but it's easier when there's a wider basket of things working. And we could be getting that, especially starting tomorrow, with the SpaceX IPO. That could bring, some more risk appetite into the markets. People want to expand from the Mag 7 which is the Mag 7 is the Magnificent 7. It's like Apple, Google, Amazon, Tesla, NVIDIA, Meta, and there's one more. I'm forgetting the last. Is it Broadcom? I don't think it's Broadcom.
I don't think so. Did you already say Amazon?
I said Amazon. Apple?
Oh, we got Apple. Apple was the first one on the board.
There's one more. I'm drawing a blank on it. But yeah, that's what the Mag 7 is. It's the 7, basically the 7 biggest companies.
Basically, when you look into the normal, like, S&P 500, those are the 7 biggest kind of drivers in it, typically, that they're going to be holding it and kind of influencing where that ETF is going, pretty much.
All right, we were missing Microsoft.
Oh, well, that was silly of us.
Microsoft hasn't been doing well, so that's why we forgot it. It was not doing well.
Well, that's probably part of
it. Still looks absolutely terrible. Wow, that is something.
Yeah,
Okay.
it's right there with Apple right now. I mean, that's an interesting kind of long-term discussion of the Magnificent Seven have been around for, um, I'd say several years, if not getting close to a decade now. That they've been pretty big drivers of like the market.
Yeah, for sure. I mean,
and so how
yeah.
long can they really be like going and on top of things for just a company?
Yeah, I mean, I think it depends. You know, it always comes down to disruption.
Mhm.
How, you know, strong of a moat do you have as a company? Like, what's your competitive advantage? How easily disruptible is it?
Mhm.
And, you know, it kind of makes sense with Microsoft. You know, like with Microsoft 365 and all that stuff, that's pretty disruptible.
Yeah.
Other people are coming out with their own versions of that.
Mhm.
It's hard for me to even, like, what all does Microsoft do outside of that? You know, it's
Yeah.
not as diversified a business line as like Amazon, who's
Well, like the most diversified wholesaler, or pretty much dropshipper,
do like
wholesaler,
everything, yeah,
anything you want.
in the cloud. You know,
Yeah.
Amazon. I mean, so
Well, not only that, they're also now getting invested in like AI infrastructure and things. So
yeah, exactly. The
they're
data centers.
really getting built out.
Yeah.
Now, data centers, I mean, that's just a very looming topic of this quarter.
Yeah, I mean, that's been a huge driver.
It's not only been a driver, but it's going to be a huge discussion on now how do you keep building them and opening them, and how's that kind of, you know, like all this money they've been putting into infrastructure, not only Amazon, but all the other companies that are kind of getting involved in this. Is that going to pay off? Of like, or are you going to get hit with like, you can't build this anymore?
Yeah.
That's going to be something to definitely look at. Of kind of very upcoming. I don't know if next quarter. I don't know if it's going to be this year, but near future time. I'm going to say that's going to kind of show itself on what's going to happen. With that, kind of looking at trends, I would say this quarter's kind of been very quick to react to information. You kind of agree with that?
Yeah, for sure. I mean, it's been like just in general, the market moves so quickly these days.
Mm-hmm.
The reaction to news flow, I mean, a lot of that is algorithmic trading too.
Yeah.
And how quickly things move. Like today, you know, we were down Friday and Monday, like you said, and
Mm-hmm.
this week's been kind of bearish in general.
Yeah.
And today, I think midday, we might have been like slightly up or flat. Because
Yeah.
I had actually walked away from the screen for a few minutes, and we get an announcement, something from Trump again that
The Trump Twitter kind of drives.
sometimes I think part of him just enjoys doing that, which is a little frustrating because, like, I like to see clean trends. You know, it's stuff that makes sense, not just like news. Boom, you miss it. You know, like, and then like the move was, you know, it continued throughout the day, but it just happened so quickly, and you're kind of in shock. You're like, you know, it just catches you off guard. So, I mean, today was definitely an example of how fast things can move.
Yeah.
We went from, you know, looking like this could get worse market-wide to a violent rally, and now we're potentially headed back towards highs. You know, like, you know, all in one day. So it's just, that's how you have to, you know, you have to constantly adapt and honestly not really have an opinion, just react to what's happening. Because, you know, you have to just interpret what's going on because no one at the end of the day truly knows what's going to happen. So you have to just interpret the information and go from there. Don't come in with, it's hard not to come in with like what you think is going to happen. So like, even when someone asks me like, what's the market going to do? I'm like, I don't know, but I'll react to whatever it does, you know, but that's the way to stay in the game.
Yeah. I think from like an average person perspective, I'll add in on this. Like for example, from personal example, I thought Apple would be a good stock to hold last Wednesday or Thursday. And then all of a sudden you have this massive sell-off and kind of, I don't know if you'd call it a correction or just sell-off. I don't really know what it, I don't know. Either way, but you go over the weekend on just thinking this would have been a good idea, and now all of a sudden you lost money on it. And I'm like, dang, that hurts personally.
Feels personal sometimes.
Yeah, and I think that's a prime example of one, it feeling personal of like, what the heck? Like, you know, just kind of always thought Apple would be solid. Thought that would be a good place to put some money for a couple days, but I think that's where it's this rapid turnaround of information and things being priced in and adjusted, that it can affect you definitely, and it can turn definitely quickly into gambling if you're not careful. which is something I always kind of push for of why you should be informed when you make decisions on doing this. But it is the stress of if you're not on top of what's going on, there's a good chance you get burned. I mean,
Absolutely. Yeah.
it's just a rough one.
Yeah, it's like even doing it full time, you can get caught off guard.
Yeah.
Very, very easily. So that's where you've got to have a strategy. You have to have, like, if you're a trader, you have to have a system that you stick to, or at least guidelines for what you're doing. Because if you don't, then you'll get caught up in these emotional moments. Like today, I could have been frustrated that I felt like I missed something and made a revenge trade or FOMO into ABC stock, and then another tweet comes out that's like, "Hey, just kidding," and then that it can happen that quickly. So that's the being able to sometimes miss a move and be okay with it. Yeah. Which is tough because there's always going to be more opportunities tomorrow, the next day. I mean, the market's open 252 days a year, so you've got a lot of opportunities to trade. But like for someone who does it full time, it always feels personal when you miss it. When something happens like a news event, because you're like, I've been so prepared for this and I still missed it. Yeah. Because sometimes things happen in the blink of an eye and you're just caught off guard, and you don't want to, give up all the rules that you've written just for one opportunity, because that's just a bad habit to get into. Eventually it comes back to haunt you.
Certainly. I think that's kind of evident in what we were talking about early in the quarter, where you had this kind of uphill for this sector. You could very easily start chasing it of like, oh, I can get on it, and it just doesn't. It typically does not work out in your favor. That's just how it goes. Yeah. That's just is. So it's just always something kind of be mindful of in thinking about. Now, from all the things we've kind of talked about, what do you think wasn't really priced into the market, kind of correctly? Because I think the rising job report, I think that was interesting that it didn't really do a whole lot. But I'm curious on kind of any thoughts on that?
Yeah, I think the thing that I've learned over the last couple of years is, I'm really tracking the stocks that are leading the market higher, and those are the stocks that I'm looking to trade. Yeah. And that's very counterintuitive because most people want to trade what's down. But in reality, those leading names are the ones with, great products and services. They're in the right industry. They're in the right theme at the time. Maybe it's AI or whatever. And then you look at their financials and they've got 200% earnings growth, 60% sales growth. They've got things like that. And a lot of people just don't, they think honestly too long term. They're like, this is too high of a valuation. Yeah. Blah, blah, blah. But they're not caught up in the fact that this company is just rapidly expanding earnings. And that's all the market cares about really in the short term for a stock is, the theme and the earnings and revenue momentum. So I think a lot of, it's been humbling to me to just see how persistent some of these stocks can be. Like SanDisk this year, I think is up like 1,000%. And I bought it on the first day of the year. Yeah. And sold, and this was back when I was trading a little more short term, and sold it for like a tiny gain. Yeah. And not realizing that this is the market leading stock. And it has been, because I think it's got 600% plus earnings growth. Yeah. 150% revenue growth. It's in the right industry. It's in the memory side of the market. That's, so it's, I think what I've learned is just don't fight a trend and don't fight strength, because usually the stocks that are leading continue to, because institutions that are buying the stock can't buy it all at once because they're too big to do that. Which means that's how those trends persist, because they're just constantly buying more and more. So I don't know if that was a great answer, but also just the market's resilience. I think, one thing just for the average person, that's looking at the markets is the market honestly needs fear to go higher. Because if there's nobody who is left to buy, then the market can't go higher. Like if everyone's bullish,
Yeah.
I mean, the market could go higher, but you honestly, there's a saying that goes, the market always climbs a wall of worry. So like recently, we've brought more fear back into the market. Like last week, we had the sell-off.
Mm-hmm.
People are scared about inflation, recession, war.
Mm-hmm.
And that's the exact moment where the buyers come back in, because the market needs some sort of fear to go higher. Because risk is the highest when no one cares about risk. Like you think about the tech bubble in the 90s, 2008. I mean, I'm sure there were some people that were sounding the alarm, but it was just too good to be true. And it doesn't feel like that right now. It's honestly felt still sort of difficult. It's not just been easy money.
Yeah. So you think, kind of looking at it, it's been pretty hard to read everything that's going on, kind of throughout the market.
Yeah, I just think if you're reading the headlines, you're not getting any one up by reading headlines in this market.
Yeah.
Or really in any market. And that's why I'm looking at the charts and price and volume and
the numbers.
Yeah, like the more quantitative stuff, because that kind of has all the news wrapped up in it. Like I don't need to know what the news is necessarily to trade that.
Yeah.
I need to know the most important things about the stock.
Mm-hmm.
The industry, the revenue growth, the earnings growth, the theme that it's in, new products and services, stuff like that actually drives stock movements. But I'm not thinking about the inflation report when I'm buying XYZ stock. I'm thinking, does this look good? Does it meet my criteria? How much am I risking? Where do I get out? Those type of things. Keeping it more strategic and not just my feelings, because my feelings lead me astray every single time. Like at the moment where I'm the most bearish is the bottom. Like the moment where I'm the most bullish is the top.
Yeah.
And that's just our emotions,
mm-hmm.
Getting the best of us in the markets, and that's how it works.
Right.
You almost have to flip what you're feeling upside down. So.
Yeah, you gotta try to. I mean, I guess that's kind of part of being in the market. I mean, you want to kind of sell out, hopefully when it's on the up, and hopefully buy near the bottom.
I mean, that's hard to do.
Feelings are gonna. I mean, it's hard to do in general, but it's also gonna be. It's hard. I think that was one of the questions was. Is it harder to sell or buy in? And that's kind of part of it. That like you're going through this mental battle of, do you, the challenge of, is now the time to buy in? Is it time to get off and take my profit? Because when you're seeing that green and it's going upwards, it's like, man, I just want to stay in. Like it's just a conflicting. It's it's challenging.
My biggest issue over the years has been selling way too soon. Like what I just talked about earlier this year.
Mm-hmm.
That could have been a life-changing trade. And instead it was like penny pinching. And so I think what we underestimate is how long trends can persist, especially if you buy the right stock. It's pretty astronomical what these stocks can do, when you've got the right, tailwinds and fundamental support too. Mm-hmm. And then also a great chart and institutions buying it. And so that's one thing that's been huge for me. So in line with that question, which is harder, buying in or selling? For me, it's been selling on the more longer time frames. Like when I'm holding something for weeks or months, selling way too early has been something that I'm trying to get fixed, because that would be a game changer for me. If I could just hold on to something, like there's a saying, buy right and sit tight. And I have hard with the sit tight part, because you feel like there's always another opportunity you want to be a part of. Yeah. But sometimes most of the time, the first and best opportunity is the one that you just need to stick with. Mm-hmm. And so that's something I've been learning. But on the more shorter time frames, I'm saying like day trading, I would say that getting in is the hardest part. Because the time frame is much shorter. There's a lot more noise. There's a lot more emotion. Mm-hmm. And so getting the right entry point with tight enough risk is really hard on a shorter time frame. But on the longer time frame, if you get in within a day or two or three of the move starting, you're kind of fine. Mm-hmm. The getting out part is like, you sell a stock at 30% and it goes up 300. That's hard to live with, especially when you had no reason to sell. It was just, I wanted to lock in some profit. Yeah, I mean, that's a painful thing to live with. So that's where, for me, it's been creating rules around selling. Like selling when it falls below this level, I usually use what's called moving averages.
Mm-hmm.
So basically, when it falls below a moving average, I'll sell some.
Yeah.
And that's honestly just a recent thing because I used to sell pretty quickly because I was trying to catch shorter term moves. But I've gotten to the point where I'm like, if you buy the right name, just hold it, and let the market take you out,
Yeah.
when it does.
Kind of ride with what you picked.
Yeah, exactly.
I feel like some of that's probably also like, I don't know, worry and doubt kind of like you see that dip in it and it's just kind of like immediately like you want to get out. And that also that's a tough one to live with because you don't want to be like, I'm wrong, so it's like, all right, taking 30% instead of 100%,
Yeah.
It's it's a very challenging and not straightforward thing, trying to do all of this while trying to read everything going on.
Yeah.
So kind of with that, I think specifically in the past couple of days or so, are you seeing kind of the sell-off as more like a cautious, or kind of you think more opportunities are going to come out of it, or?
Yeah, I've been seeing a lot of opportunities leading into today, and today we kind of got a rally.
Mm-hmm.
Obviously not going to predict the future, but leading stocks, the thing that I usually pay attention to are what I call the leading stocks. So basically the stocks that have been performing the best.
Mm-hmm.
And when those start to roll over and go lower, like consistently lower, not just for a few days, that's usually a topping signal for the market. And we just haven't seen that. Today they all snapped back just so strong. Like when the market was up 3 or 2%,
Mm-hmm.
a lot of these leading names are up 14, 11, 11, 10, 9, 9, 9, 8. Like just super strong performance, which shows that there's still a lot of risk appetite to buying, the semiconductor names, the memory stocks,
Mm-hmm.
the fiber optics,
Right.
even the space names leading up to SpaceX
Do you
tomorrow.
think some of this like bounce back though is partially because of the news? Like you have Trump tweet on Monday or Sunday that like the ceasefire's off, and then today you have him come back and be like, just kidding, we're fine.
I think so, but also like there's always going to be news that surrounds what happens.
Mm-hmm.
You can always attach a news event to it.
Yeah.
A lot of it's money flow, and the fact that we went up with like hardly any pullbacks
Mm-hmm.
for 2 months.
Yeah.
We were bound to have something like this to, like I said earlier, bring some fear back into the market.
Mm-hmm.
Someone's got to sell at some point. Somebody's going to lock in some gains.
Yeah.
And this could just be a one-day bounce. We really don't know until tomorrow and next week.
Yeah.
But, from just looking at things the way and what I'm seeing now, it looks pretty constructive. This doesn't look like a terrible, long-lasting correction.
Mm-hmm.
It's going to last like we had from, October until the end of March. Like it doesn't, like a 6-month consolidation like that. I don't, like I said, I'm not going to predict. I'll react to what happens. But we just had a lot of strength, and there's a lot of money still on the sidelines that's ready to join in the rally and get in there.
Yeah, I think.
So, like I said, there's a lot of people that were caught off guard in April and are still probably trying to get in as much as they'd like.
I'd say still, for me, probably more of like a bullish idea of what's going on. I think it's still probably going to go up. I think there's a lot of activity about to hit the market. SpaceX is obviously a massive, I guess, rocket in the room.
Yeah.
But like, I think that has a good chance to pump a lot of money into the market. That's probably one of the biggest IPOs in the last while. I can't really think of.
I could see that getting, retail people like ourselves more involved. Like,
Yeah.
when was the last time you talked to somebody and they were talking about trading on Robinhood? Like, that's just not been, that's not been mainstream like it was 3 years ago.
Yeah.
And maybe SpaceX is kind of the kickstart to bringing a lot of those type of traders back in.
Well, it's also interesting now that you hit it at the same time where you have the new day trading rule.
Yeah.
That you don't have to have 25,000 on your account. Now that's not gonna
bring the gamblers back.
Yeah, that's pretty much what it's gonna do. But that's gonna pump money into the market.
Yeah.
Unfortunately and fortunately, whichever I don't know.
No, I think it's great.
Yin and yang, you want to look at it. But I would kind of preface that with it's not going to be like institutional investor. Like, you know, it's not billions of dollars getting, but I think it'd be enough to show up. Just kind of speculating of what it's going to do. So it's definitely going to be interesting to see what happens, come tomorrow. And I think really next week is the teller. I think you have some IPOs that release and you see immediate kind of pump in and buy in and they go up. And then a couple of days later, they're, at a couple dollars.
Mm-hmm.
I don't think that would happen with I don't think SpaceX would bottom out.
Yeah, I mean, the thing to me I would assume there's going to be a lot of buying interest from retail there.
Mm-hmm.
It's going public at $1.77 trillion market cap, which is like 30% bigger than Tesla. Like SpaceX is going public at a bigger size than Tesla, and
Tesla is now also like it's not when they released their IPO.
Literally Tesla today. SpaceX is going public tomorrow at a higher valuation than Tesla is right now.
Yes.
So like you got to remember what you're buying. If you're buying SpaceX for the next 10 years, still that's a lot to pay for it. I mean, and that's not financial advice, but I look at it as how do I play that IPO elsewhere? Like what are the other space stocks I could buy?
Yeah.
What are other ways that I could play this theme without taking the risk of buying SpaceX itself? Because that's kind of the second level thinking that can be effective is what are the other opportunities that the market's probably going to pile into because of this IPO?
Yeah.
Because you don't necessarily have to buy the IPO itself. You could, look at other opportunities that are adjacent to it. So I have no idea what's going to happen. I would expect it to go higher and then maybe come back in next week, like you said. But, I mean, who knows? I mean,
you never know with
it's the biggest IPO ever. So, I mean, we've never seen an IPO of this size.
It's
going public at almost $2 trillion is insane.
Yeah.
Like $2 trillion was like the biggest company in the market like 3 years ago.
Yeah.
Like NVIDIA. I remember when NVIDIA hit $2 trillion.
I just have a lot of hesitancy with SpaceX on being that high. I don't really see what they're going to be bringing to the table. Like, as in, understand we're getting rockets and we're trying to advance everything and go to the moon or Mars and whatever. But how quickly does that actually happen? And it seems like it's pricing in like it's definitely going to happen. And I don't think it's that close from just like a personal standpoint.
Well, it's the same thing with Tesla, but Well,
that's the whole thing with like EV car brands. Like, they're not going to be in like taking over the world anytime soon. But to me, they're kind of priced like they are, of that they have these very high valuations, but they're not even close to being where you could just like mass distribute them and get rid of like gas or diesel engines.
Yeah, so I think the main thing is it's similar to Tesla's that they're going to have a lot of different product lines. It's not just, rockets. So they've got the connectivity stuff with Starlink and obviously the launch and space services. And then they have an entire AI section of the business.
Yeah, but that's like having the shoe company that said we're doing AI and then all of a sudden they went up like 1,000%.
Yeah. Well, this is the norm with Elon's companies because Tesla traded at a crazy valuation. Well, it's always traded at a super high valuation.
Yeah.
Compared to what its actual earnings are. Mm-hmm. But never this high, I don't think. Maybe as a percentage at some point. But I mean, I don't know. I mean, it's super exciting. It's cool. I think
it's going to be very interesting to watch.
It'll be an interesting day tomorrow. I'm sure CNBC will be going crazy and
whatever other market channel you want.
But I think it could be definitely something that brings the retail meaning just the average Joe back into the market to get them interested again, especially if a lot of the high beta thematic random no revenue companies start going higher again. That's when the average Joe gets super excited and starts buying AMC and GameStop.
Stop putting some money in. Yeah, maybe.
Remember when that was a thing?
Yeah. Maybe if they didn't buy a Game 3 Knicks ticket, they could put that money into SpaceX.
That's crazy, yeah.
Yeah. it'll be fascinating. To me, it's not something I want to put my money in.
I thought you were taking out your 401k.
Yeah, I was going to take out a
liquidating
loan
everything you own.
I was going to go 100% margin and just go for it. Everything on the wall. Yeah.
Don't do it.
Don't
do it.
No, I think it's going to be more interesting looking at those kind of secondary stocks and what's going on with them. I think that's where you have some actual value in things going on. I would see that. I just see the SpaceX as being something I don't want to touch.
And I could be completely wrong. It could go public and double and be the biggest company in the world.
That's ever existed in all of time and ever will, because it's just quite.
Because why not, right?
Yeah.
That's kind of how I feel about it. Like whatever it does tomorrow, I'll be like, well, why not? Why not?
Yeah, I mean, if it goes to maybe it'll go to the moon.
It's gonna have a moon landing.
Yeah, supposedly, hypothetically.
I know.
Yeah, that it is just a massive. And then I think the other IPOs, AI companies. I thought OpenAI.
Bring them back. Bring back the IPOs. We haven't had them in so long.
Yeah,
we need more.
What's you know how many IPOs have been released in like the past? Because
It's not been many.
It's not a lot.
If it has, I've been out of the loop because seems like it's been pretty.
No, seems like pretty
low.
Weak. Yeah, to me, I think the IPOs are a good way. I think this is interesting. It draws a lot of buzz, and I think it's going to get a lot of money going into it.
And you get a lot of people back involved.
Yep, and I think that's important. I think also it makes people a little more. Some people more risk taking, others kind of pull back and correct. I think that could have been also some of the sell off we saw as people are trying to buy SpaceX. Wanted that money opened up from that AI sector or tech kind of sector, and you want to move it into this stock. So that could have been part of the play. We will see.
Yeah. I just think it was a needed pullback. Honestly, I think it was something we were due for, and this is how markets move. They always have these correct. It's called correction, where not a full bear market. We're not down 20%, but we're down 6 to 8.
Yeah,
and it gets people scared again. And you need people. Like I said before, you need some sort of wall of worry for the market to climb.
Yeah.
And hopefully that brought some of that back. And today was the strongest rebound that I could have envisioned. So we'll see what happens tomorrow, I guess.
Yeah. I want to talk a little bit about your process with everything going on. Because one of the things we kind of talked on was you were originally doing swing trading and holding it, but now you kind of had to shift your style to more of like a day trading. So I'm kind of curious on like, how is that now? Has that changed how you're looking at getting in and out of trades, or like kind of has it changed? I imagine it's had to evolve your process or kind of pivot a little bit.
Yeah, definitely. It definitely has. So I think part of what I had been good at in the past is, using the analysis and the charts and the entry methods I have to buy the stock on the day that it starts to move higher. So that was kind of my core skill that I was good at. What I was really bad at is continuing to hold. Selling too early or cutting my profit. Like I said earlier, selling too early. Really.
Yeah.
Getting in, obviously wasn't perfect at it, but was better at that than holding. And so, professionally, because of the route that I've gone and who I'm trading with, it's way more beneficial for me to focus more on the shorter term day trading, just based on the structure I have.
Yeah.
And what I'm able to do. So that's kind of where I've pivoted. And so what I was trying to think up is like, I've been doing it for 2 months, so it's taken a while to develop the right strategy for what I have. And I'm basically thinking, what was I best at? It was day one identification of the stocks when they start to move out. Like I said, I bought SanDisk on the day it broke out at the beginning of the year.
Yeah.
Could not hold it. That's something that I'm working on. But what if this strategy that I'm doing now just capitalizes on that day one? And then I'm just cycling to the next stock that's breaking out. I may not catch the whole move, but if I can catch the full day one of that move and compound that's a huge, that would do extremely well.
Yeah.
And so basically I'm looking at the same things I was before. So I'm looking at, the more longer term chart. to get, an idea of what the overall trend is. I'm looking at a little bit of the fundamentals. It's mostly charts, but I like to know what theme it's in, whether it's in the AI space or whatever basically the company does, because that matters. A stock's not just going to go higher for no reason. It needs to have a theme or earnings or revenue behind it. So I'm looking at that too. I like to see, strong revenue growth, usually over 30%, earnings growth over 30%. Stuff like that. But then what I'm really honing in on is, the really zoomed in charts to get the timing right on day one.
Yeah.
So that's kind of what I'm trying to do, is catch a trending move through the entire trading session, which has been hard recently because we would drop at the open and then rebound and then drop again and then rebound. And I'm looking for more of a clean trend intraday. Like we open, maybe we go sideways, I get a good entry on a stock, and then it trends for most of the day. And so from there, I'm just what's called trailing my stop. So I'll just move my stop loss up as the stock moves higher.
Yeah.
Or lower if I'm shorting and it's going lower. So that's kind of the general idea, is to take that framework I was using for swing trading and just really try and capitalize on that first day that the stock starts to move.
Yeah.
And then cycle into the next one the next day. And then just kind of continue to hone that watch list to capitalize on that, what I call a day one expansion. It's kind of what I'm looking for.
It's a lot more. That's very interesting. It's quite a pivot of like going from this idea of kind of holding it, through close and then opening the next day. And now instead kind of looking at it as like, you're narrowing it in quite a bit. And that does sound a whole lot better than, I think it fits more of your personality. From like an outsider perspective?
Well, like in my in my other account, this is just because of the structure I've been given. That's the best way to execute. I can't really do a great job of holding things overnight with where I'm at right now. But in my more long-term account, I'm still trying to hold things for the bigger move, like I was talking about.
Yeah.
Like get in a market-leading stock and hold it.
Yeah.
But for this strategy, it's the best way that I really can go about it, I think. So...
Yeah, I mean, I think it's probably beneficial to have two different accounts where you're kind of getting to interact with two different strategies of going about this. Yeah. Because there's not a single, path that locks it in unless you're Dave Ramsey and you just buy a mutual fund.
It's just too boring.
It's
just too boring. It's just way too boring.
Crazy idea.
I'm like, okay, cool, you may have $1 million when you're old, but... Did your heart rate hit 200 at 10 a.m.? Probably not.
Doubt it.
Were you excited? No. You were bored.
Yeah, you swing down, a couple grand, and then swing back up a couple more grand. That's the fun. It's all fun. It's fun. I have a great time. It's no, but it is interesting that you get to kind of always evolve both these processes simultaneously.
Yeah.
So that's cool. I mean, I'm curious to see kind of how it continues to go with everything.
Yeah.
And hopefully it's
just kind of like
the best.
You don't have to read that out loud, but you can kind of see like what I'm. That's kind of the.
I like to have a daily got it written out what you're going to do.
Yeah. So like I have like the more. So I've been like writing this up and having to redo it as I've learned more with this firm that I'm with.
Yeah.
So I write up my trading plan and I've had to just keep printing it out and editing it as I've learned more and tried to adapt my strategy, and I've kind of landed on what is the best way to go about it. Now it's just, executing it and refining it and stuff like that based on the structure I have and what I'm able to do there.
From this, so you have 1 to 2 names that you look at. What's like the narrow down process? Like, is that looking at charts the morning of?
Yeah, so I'll kind of give a little insight on that. So I usually...
I think, like, sometimes when you're thinking about day trading or, like, any trading involved, you're thinking about, like, hundreds of stocks. So I think it's important to mention that, like, it's a very narrow... You're talking 1 to 2 that you're looking at.
Yeah, so that's the hardest part, is narrowing it down. So I have, like, these different screeners that I run for basically what I'm looking for. And that list, I basically go into the day with a list of anywhere from 0 to like 10 to 12 Like when there's a ton of stocks working and everything, maybe it's 10 to 12.
Yeah.
And so I go into the day with 10 to 12 on a watch list that's called my on watch.
Mm-hmm.
So it's just names that I'm watching.
Yeah.
Kind of less in depth. Just this is my universe I'm looking at today.
Mm-hmm.
And then at the open, from the open until like 10 o'clock, whatever the market's doing is the most important thing. Like if the market is bearish,
mm-hmm.
probably it's not a good day to be getting a trending move in any of these stocks. But
that's kind of like your read time to analyze what's going to happen.
What's going on? Yeah, like I have this list, but that doesn't mean I need to buy them today.
Yeah.
And then I have the software I use that gives me the volume. It's a very specific statistic, but it basically tracks the volume of the stock that it traded that day. And so it gives you a real-time comparison to how much volume it's trading today versus the last 20 trading days.
Huh.
So if the last 20 trading days at, by 10 a.m. it was trading a certain amount, and today it's trading more than that, it'll say like 1.2 or 1.4 or 1.6. And if it's way less volume, it'll say like 0.5, 0.6, 0.7. And to really get a trending move in a stock the whole day, you need volume. So one of the things I'm looking at is how much volume is it trading.
Right.
And so,
because you don't want like a 1 or anything below that, really.
Yeah, and I usually use 0.75. That's kind of my filter because it gives me a slightly broader universe, because it could start the day at 0.6 and end the day at 1 if volume keeps coming in. So I like to expand it wide enough to give me a little bit more universe. But that's one of the filters I use. So like if I'm trying to... So like, and sometimes that works, sometimes it doesn't. It can be hit or miss at times, but I do like to see the volume there, because it's usually a sign of buyers.
Well, I think that's a quick way to narrow it. I mean, if you're looking at 10, 12 stocks and some of them are at 0.5 or, below your threshold, then
that's kind of what I use it for.
It's kind of an easy way to narrow it down to 5 or, cut it in half.
That's kind of the idea. It's still something I'm tinkering with, because there are days like today where, there's a name here that's 0.6 and it was up 9.5%. So it's like, there are days where that sometimes low volume means there's no sellers. Just like no volume could mean no buyers, it could also mean there are no sellers.
Wouldn't it also be more risky if there's less volume on like what's going to happen with it?
And what I've noticed is there's a lot more just like midday reversals. Like a stock starts the day going higher, and it's got super low volume, and by the end of the day, it rolls all the way over. Yeah. So that's kind of the idea. Is if I'm trying to catch a trending move for the whole session, I need some power behind the move, and that's kind of the general idea there.
It's very interesting. It's always curious to see what you're doing behind the scenes. All the things that go on in that big brain. What else is going to happen? I think what's to kind of pull this all together.
So it's a lot of process. That's kind of the idea.
Yeah, there's a lot more behind the madness than you would think.
There is a lot of madness.
You're not just there sticking and clicking the buy sell button. There's much more going on. Oh, when
Tesla today.
Yeah, got a vibration. It's gonna happen. And again, I think that's important to note that the amount of information you're taking in is quite a lot. Comprehensive in a sense, but also I'd say I'd probably agree that it's not totally imagine there's things that you just can't look at because you just don't have time or like bandwidth to like pull in all the factors.
Yeah, sometimes it is information overload, and I have a hard time filtering it down, because it's usually a good sign when I have too many stocks to trade, because that means the market is setting up well. I almost like it when there's not many, and it's either I'm going to trade these 2 or 3 stocks or do nothing today. Yeah. Those days are sometimes better than like holy cow, everything's green. I want to buy everything, but I need to limit myself to 1 to 2.
Yeah.
Because you don't want to, buy your third or fourth best stock if you could just buy your top 2. Because what are the odds that buying six random stocks is going to outperform your 2 best?
Yeah.
Especially if you're a trader. Even if you're an investor, people always talk about diversification, but if you're really picking stocks, you want to be in the best ones.
Yeah.
And you want to maybe not put your whole portfolio in one stock, but you don't want to, you don't want to be in 600 stocks,
Right. Unless you're,
unless you're in an index fund.
If you're in an index fund, but if
you already are at that point.
But at that point, if you're trying to create your own index fund, the problem you're going to run into is the fact that you cannot kind of react to market times as quickly as in the algorithms, and you're not going to beat Vanguard trying to run your own ETF.
Good luck with that.
Yeah, good luck with it. You can make a very specialized portfolio that probably does very well. But when you're trying to trade, I would say 25, 50 plus stocks, you're going to run into some challenging times when you try to kind of correlate in what's going on and what do I need to sell off. Very difficult. Probably not a good idea, generally.
Yeah.
Say, not giving you personal advice, but generally not a good idea on how to run things. I'm curious though, when you're saying all green, are you becoming more kind of optimistic or more like cautious of what's going to happen?
Well, it depends. Like coming out of a pullback, definitely more optimistic. After a crazy run and things are getting extended and I'm running out of stocks that are what I call viable at this point, like they're not really viable anymore. That's a little different than coming out of a pullback when I'm like, okay, this is starting to set up and everything. So I think that's kind of the difference there. But yeah, I'd say I'm not sitting here trying to outsmart the market. I'm usually just taking what the market's telling me and trying to react and adapt to what it's giving me.
Yeah.
I'm not sitting here trying to predict what's going to happen tomorrow, but I want to be prepared to take action on whatever does happen.
Yeah.
So that's kind of the way I'm looking at it. But I mean, green in an uptrend. Yeah, I mean, as long as the market's still in an uptrend, I would view, an up move positively.
Yeah.
Yeah.
So now putting on kind of little long range glasses. Next quarter, is there anything that you'd kind of, are you still thinking AI tech is going to be the sector to kind of look at? Or do you think now maybe we move into some other, anything else coming out of like the woodworks?
I've really been waiting for, I feel like I've been expecting it to happen and it hasn't quite happened yet, but I'm waiting for the market to really expand and many stocks to start participating. Like if this is a true bull market that we started in April, eventually, the robotics theme will catch up, or think about drones, or the battery technology, just all these high beta meaning very volatile sectors are going to start to participate at some point if this continues and has legs.
Yeah,
because people are going to get tired of buying the same old stocks, and they're going to be like, how can I go out on the risk curve and buy
something that's going to pop up 20% or something crazy?
That type of thing. And when we start to see that, that's a very good sign. Like rare earth metals is another theme.
Well, that'd be a very interesting. That's a hot conversation as well, which is kind of interesting because everything that we're talking about involves rare earth.
Exactly. It's been shocking to me, really. Nuclear energy hasn't really.
Well, that's going to be. That's going to be part of the data center and all of that kind of subcategory conversation. Because they've tossed around like mini nuclear power plants, and that would be one that's a source of clean energy, which would be good. There's a lot of positives about nuclear energy. I'm not going to strongly say one way or the other because I think people should kind of look up and make their own decision. But that is one alternative. there is going to be kind of getting earth metals. That's a very tough conversation, especially where you're getting those from. Of a lot of pretty like third world countries, basically. And also, China has a pretty big control over them, which is not. It's kind of limiting for the U.S. if you continue to have tensions with kind of Taiwan hasn't really been in the news as much of tensions over there. But it's just going to be what I think. Unfortunately, I think news will have a very what happens in the next quarter.
Yeah.
The thing that I would recommend people, it's Cobalt Red. That's fun to read about. Not really. It's pretty depressing, but it talks about where all these earth minerals come from. And it's pretty horrible. It's pretty it's kind of like blood diamonds, essentially. So, yeah, I think, I would encourage everyone to always be knowledgeable. Go find something out that you didn't know today. Now, with that, what do you think, like, the regular Joe should take away from this quarter? What would be like the big kind of takeaway?
Yeah. I think in general, like, markets are permanently going to feel uncertain.
Mm-hmm.
There's always going to be headlines. There's always going to be some type of risk that people are talking about, whether it's inflation, geopolitical, an election, a recession, anything along those lines. There's always going to be headlines. So this period of time is not different. There's always a comparable period from the past. And so I think the people who do well over time accept the fact that there's always going to be uncertainty. I just have to learn how to navigate it, control my emotions, either have a long-term plan that's just long-term investing. I don't even get caught up in it. Or as more of a trader, you have to have a process that basically cuts out a lot of that noise. Like, I'm not the best guy to talk to about the news flow because in general, I'm a lot of times trying to ignore it because I'm focused on what is price doing.
Yeah.
Because the news flow could be bad and every stock could be going up and the market's trying to tell me something. So I think it's
like Caesar Malone, but for stocks.
Yeah, it's like I think doing well over time comes from consistency, sticking to the plan. Don't make emotional decisions at the worst possible time. Like, I think those are the main things. Avoid the big bad decisions. I think we talked about this in the last podcast. I mean, for the average person, if you're not trading, keep up with what's going on. I personally would recommend doing more research on like individual stocks. That's more fun than getting caught up in the geopolitical or this. Like finding some diamonds in the rough that you can buy and hold and do well with, and maybe a personal account on top of your 401k. It's more fun, I think, than to get caught up in the news flow of politics or geopolitical or inflation's an important thing to know about, but it's hard to make good decisions in the market based on that information because it's all publicly available.
I think inflation is going to be more of a driver in your regular everyday life.
Yeah.
When you go to the store, you're going to see it. I think especially over the year, you've seen it. Whenever you're like, wow, things don't cost what they used to. Old classic.
Yeah. Always thinking that.
So I think some of those do come in more kind of just your daily life is what it's going to change versus when you're looking at the market. It's not going to have a ton of sway. I don't think, at least over the past while, it hasn't had you might have a spike like when it gets kind of announced, but it's not driving it. Rates, I would say, would be the only one that could maybe have some more, but right now with inflation, it's just kind of been canceling everything out. So I don't really know. I mean, I would expect that trend to kind of just continue of like, I don't see that changing rapidly to me. Maybe I'm wrong, and I would appreciate to be wrong.
Yeah, well, and the thing too is like even, inflation could be, slightly higher than it's been historically, but at the same time, we've had higher interest rates for a prolonged period of time now, and the economy has held in there. You know, it has done way better than everyone expected with higher interest rates. I think the housing market is kind of picking back up again, from what I understand.
Yeah, I hit a little bit of a, well, I think you're not having as many, you're having more homes listed for sale than are being purchased, I believe.
The KRE, which is the real estate index, looks like it's breaking out right now. So I don't know what that means, but it can't be bearish for real estate.
Yeah.
I mean, that looks incredible. So, I mean, that's not very recessionary, I don't think. I don't think it'd
be recessionary.
No.
I think the odds of having a housing recession would be extremely low. That would not be my concern.
I actually think it's going to start tomorrow, so.
Oh, well, yeah, next quarter.
You're that guy who's like predicting exact dates for things to happen and then always wrong and then.
Yeah, just keep predicting a recession and eventually you'll be right. You'll eventually get it right.
Told you so.
That's the meme I saw though this morning was this guy's predicted the last 45 recessions out of 3.
What is it? 10 of the last 45 recessions?
Yeah.
45 of the no, it's like 45 of the last 3 recessions.
Yeah. Yeah. So, you know, it's like baseball basically. You just got to keep throwing it out there and if you're hitting, you know, like
just keep swinging.
Yeah, hitting 10%, it's great. It's amazing. Awesome. Good for you.
Yeah.
Yeah, it will be a very interesting quarter going into it. I don't see a whole lot changing on what's kind of been trending. I see it
just keep on going.
Seeing it being very tech focused, and you're gonna have headlines that kind of pump and dump in the same day a little bit. And that's just kind of what it is right now.
Yeah, it's kind of what it's been, but you know, there's always opportunity out there, and always some type of opportunity out there for sure.
Yeah.
Sorry, I'm looking at. Always have the charts. It helps me think about what I'm talking about.
Oh yeah, get the brain flow going. I think something could end on that would be good is if we do make it again to another quarter, and we're blessed with your time again.
So is this we're doing the Q2 right now, right?
Yeah.
Okay. So we've got a couple weeks left before Q2 ends.
Like 2 or 3 weeks.
Yeah, the 30th.
30th. And
so we'll see if things change. Like things are setting up pretty well. I mean, it could be a good end of the quarter. We'll see. Knock on wood, but we will see.
I hope so. I always like good rather than bad. I mean, don't we all?
Yeah, we're gonna come back. You're gonna be like 3 weeks from now, and like we hit like new lows for the year.
Yeah. Fun fact: everything we said wrong. That's why we led with. I would probably not listen to us for your direct investment.
No, I'm not giving any advice. I'm just saying this is what I'm seeing, and this is what could happen.
Looking ahead, what do you think we might be talking about if we did a Q3 update? What do you think kind of major trends coming up in the next month or so? Or I guess that'd be next couple months.
The retail traders are back. Meme stocks are ripping.
Summer meme stocks? Is that like
summer meme stocks? The retail traders are back.
Yeah,
everyone's trading again. Markets are going higher. Everyone's excited about stocks. And I'm coming on here to talk about which robotics stock I bought today.
That's 10 cents.
At 10 cents. And now it's $124.
It's trading at $3 trillion right now, actually.
So honestly, that's kind of, ever since we started the rally in April, I've been waiting for what's called a breadth expansion, when it's basically when a lot of stocks start participating.
Yeah.
And I don't think we've had that yet, but we may have a day where we get that, and it's going to be like, all right, game on.
Yeah.
Let's play ball. That's the environment where it becomes a lot easier because you're not having to trade this narrow list of leaders, which are sometimes hard to trade because market leaders are all trading at $800, $350, and although that doesn't matter, you'd rather buy a smaller stock just mentally than buying one share of an $1,800 stock.
Yeah.
You know,
there's something fun about buying the stock at like $24 and then like it's $100, you know?
Yeah.
And then it's like, you feel a whole lot more satisfying than buying like a $300 stock and it's now like $320 or something. Like, it's like, all right, like whatever, dude.
Yeah. No, so I'd say maybe that's my hope. more so than what I think will happen. But I
Bring back the meme stocks.
think we might get some memeage.
I hope we get meme stocks.
I think we might have some memeage
That's the
in
call.
Q3.
That's the call.
The Q3 call is memeage is back.
Bring
The
back
meme
memeage.
stocks are back. Everyone's buying XYZ robotic stock.
Yeah.
Why are the drone stocks ripping? Who knows? Wait, what? There's another space stock going public?
Space Z? Oh my.
So that's maybe my bias kicking in, but I'm very optimistic. I always like to see good things happen, and so why not? Why not have good things? You know, so
Yeah, it'll be like the opposite of calling a recession, calling the optimism.
yeah, like they're like, when was the last time somebody called for optimism?
Yeah.
Never.
We have it here first, folks.
The first ever market commentator who's optimistic.
Guys, it could be great. I don't know. What are we even worried about?
Like, I think things are gonna be just fine. Like,
Guys,
trust me.
we're going back to buying GameStop. That's the idea. It's coming back.
I hope that we're gonna have a new list of meme stocks this time around. I have a good feeling.
That'd be so much more fun.
It's gonna be a great list.
I like getting called from someone that I know, and it's like, "Did you buy in AMC?" And it's like, "No, I did not." I'm glad.
Yeah.
It's like, well, I'm up 3,000,000% right now.
Yeah, I know, and maybe I feel bad, but crypto has just been getting wrecked. So maybe
Oh
crypto.
my gosh, you should probably talk about that too.
Maybe crypto will come back one of these days. But oh
Dude,
boy,
what happened?
it's just been getting
All of a sudden, Bitcoin
Flabbergasted.
just
flabbergasted.
knocked out. I mean, it dropped from like 100 and
127, 240.
Yeah.
And now it's 63.
60.
63, so about...
See, but crypto to me is just like not a worry because eventually it's going to go on this mega run. I just feel.
We keep saying that. I mean, hopefully for the
But it
people
went
that are-
bearish for
It's
like
down 50% from the highs.
it went bearish for a long time, like in the.
It always does. It has these long bear markets. But the thing that's got me with this one is the market overall has been bullish. And so crypto's been so bearish during a time where the general market itself has been going up.
See, it would concern me if it was a regular stock, but crypto to me is just such like a different market that I just think it kind of does what it wants to.
Ethereum's down 66% from the highs.
That's a little tough.
That
But
is
how much
tough.
is Dogecoin?
I don't even know if I can pull that up here.
I don't
I
know.
don't have features for Doge.
I don't know. Lame.
Yeah.
How am I going to trade my memes?
I have to send you a meme list.
Yeah. That's what we need. Here's all the meme stocks you should buy.
The most memeable stocks to trade.
Yeah. I don't know. I mean, to me, it's just crypto has just always be its own little category of funness. To me, that's like if you wanted to just throw some money into the market and see what happens. Crypto is what you would put it into.
It's the last thing I'd touch, but to each their own.
I mean,
I'm just kidding.
put it in there. And
I mean,
see
just
what
like right now, from the way that I trade, I don't buy the weakest thing.
happens.
It just means no money is flowing there.
Yeah, I don't know, but you could have a run that all of a sudden it's now like 130 again, and it's like,
That's called gambling.
yeah.
There's no proof to show that's
There's no proof that crypto's investing at all. It could just be a currency still, and no one knows because
No one
we
knows
can't
what it
determine what it is. No one knows where it came from. No one knows if any of it
We
works.
don't know who the founder of this thing is.
It just appeared all of a sudden.
It just
Oh.
is. But yeah, I could see that too. I could see it bouncing back, and if it is, it should start now. I mean, just looking at my
Right
charts
now. Right.
like this very moment. I mean, it just like at some point this thing has to bottom, and 60 is a pretty good logical level. So, not calling a bottom, but if that goes much lower, man, that's
questionable.
gnarly because that's tough.
That's falling way back. I mean,
that's
like
back to
2023 or something.
24 bear market.
Yeah, sure. Yeah, that would not be great for the team. I think it will be. See, my only thing with like Bitcoin and Ethereum is I don't know what their utilization would ever be for like a government entity to be able to be like we made like a reserve currency on it or like balance anything to it. And I think there's like hope that it would kind of do something of being like a standardized way, and I don't think it'll ever happen.
Yeah, I mean, I still think there's a great use case for it. I'd rather buy.
Right now, it's just a great like black market.
Well, especially the way that I look at the markets, I like to find something that has a story behind it that can go higher, and also like,
well, you can get a meme coin.
yeah. Well, I mean, like, or at least I can look at this and be like, wow, 200% revenue growth. That's
Yeah.
something that's a reason for the stock to go higher.
Yeah.
Because it has to catch up to that number.
Yeah.
With crypto, it's I'm buying this because I think people will buy it after me.
Yeah. Well, I mean, you're trying to hold the token, the like coin, that there's.
Well, it's not physical, so you
but
can't
it's
go
not
coin.
physical. Well, I imagine
It's a mental coin.
you could pull it into like a USB, and then you could
I
have
used
all
to be
your,
a big crypto guy, so I mean,
I don't see what the exact future is for it. I'm also not the most educated about what's going on in the crypto world.
me either. So
However, I know it doesn't have really a product, and it can pretty only much be like sent between digital wallets. And outside of that, I don't really know what you do with it.
and you can also hold it with an exchange that goes bankrupt, and you lose all your money.
You could.
Not talking from personal experience or anything. But.
No, not at all. Or you could have bought a NFT and been really cool.
For like
30 seconds.
For like 6 months, whenever that was a thing.
Dude, you could have a really cool ape that only you own, but everyone else can view the picture and see it for free. But that's no biggie.
That's the type of market we need back.
Yeah.
When their stocks are so bullish that people don't even buy them anymore, they buy pictures of apes.
Yeah. Bring that back. That was a fun time. Really couldn't miss. It was just like throwing it on the dart and just throw it. Just in the land. I don't know. Simple.
It's a good time.
Yeah.
I didn't have any money back then, so that was the bad part.
I was just watching again.
Couldn't make anything back then, really, because I had $25 to my name.
Yeah.
In 2020, but
you're there. Yeah, it'll be interesting. We shall see what happens. Do you have any good closing notes besides bring back meme stocks?
Meme stocks. Yeah, I think for the most part
I think we hop skipped our way around.
Yeah, we kind of hop skipped our way around all this. I think you had a question that what has trading taught you about life?
Oh yeah, please.
I think the hardest part about trading is when you're a trader, the market is basically a mirror into your own psychology, your own emotions. So for good and bad, I have become very, very self-aware of my flaws, which can be hard.
Limited, no flaws.
Plenty of them. Many, many, many flaws. Like fear, greed, impatience, pride, needing to be right. All of it shows up, and it shows up fast, especially when you're under pressure. And so I think it's matured me a lot. A lot of maturity has come that I wouldn't have had if it weren't for the markets, because it's taught me a lot about myself, my life, and just kind of my outlook on things. And I think the hardest part about it is all those emotions that you feel or whatever's going on in your life, the market does not care. The market's going to do whatever it does on its own time. It's not on your timeline. It's on its own timeline. So especially when you do it for a living, it's hard because you have certain bills that you want to come in. Certain things, you want your income to come in at a certain time.
Yeah.
But the market's going to provide you opportunities when you're least expecting it.
Mm-hmm.
So you always have to be ready. So I think generally I would encourage people to understand it, get into it, because it really does teach you a lot about life. And I thoroughly enjoy getting up in the morning because I get to do this.
Yeah.
And so it's an extreme challenge, and it can be hard. I mean, sometimes it's great, and sometimes it's like, man, I wish I just had a regular job, But it's super rewarding what it teaches you about yourself, about life, about risk, uncertainty, patience, all the buzzwords, discipline.
Mm-hmm.
Still working on that, always.
Yeah.
But I think it's given me, I wrote down, it's given me a very clear and very expensive mirror. And 6 years in, I'm still learning from what I see.
Yeah. I think that's a great way of putting it.
Yeah.
It's a constant teacher.
Yeah.
That really punishes you
while you learn. Mentally and financially, yeah.
Yeah, really.
It's great.
It's like a double whammy. Well, I think with that, Graham Burton, you can reach out to him, talk about stocks. Loves to talk about them. And we will probably see you for quarter 3. Might come back.
Let's go. We get to do this at the end too.
Yeah, we'll do it at the end too.
There we go.
Stonks. There we
Stonks,
go.
baby.